what's happening, investors. I feel like I haven't done an episode in quite some time. So I'm going to go through some trades. I'm going to show you the account where I'm sitting at, some of the moves I'm making, and why I'm making them. So without further ado, here's what I'm sitting at right now. So for a lot of you, you're familiar with this account. It's been public for like 4.5 years or so, 5 years. I don't know. It's been through some ups and downs, followed me through crashes and bull markets and some crazy option stuff. But right now we're chilling. Okay, we're chilling because I'm sitting on a lot of cash for me anyways. For this account, I've never been in cash for such an extended period of time, holding $35,761 at the moment. I have slowly started to get into JD.com. Right here you can see on the right. I made a video about JD. If you want to check it out, that'd be perfect. I do a kind of an in-depth commentary about all my opinions of the company and everything. I also did one about Alibaba a couple of days ago. So that one's a really long one, but I tell some real personal stories at the end. If you want to check them out, you may have a good laugh. So here on my positions on the right, I'm still holding some options that are long dated, but they're not really worth anything. So nothing really worth looking at except this trade right here, which is a debit calendar spread I put on. And also I sold a call at 180 strike price for Apple. Now the reason I'm playing Apple is because the premiums are fat. Oh, by the way, if you noticed, I've added some decor here because I'm so aesthetically focused person. There's a little bit of a floral theme. All right, so if you don't like flowers, I don't know what to tell you, man. You got to start appreciating flowers. Okay. So anyways, the reason why I'm playing Apple is the earnings coming up, and it's possible that they beat on the upside, but I'm kind of guessing a flat outcome. So I am currently selling a calendar spread, which involves two options of different durations that are exactly the same in strike price and type. So for example, you can sell the shorter duration put and you buy a longer duration put to cover it. Now, some brokerage houses will require you to have quite a bit of capital in order to put this trade on. I don't know if Robinhood does that, but surely with $36,000 in cash, I have the coverage and I have margin turned on. So that's going to be another $140,000 of available cash. So there's going to be no problems here. But if you are running a smaller account, you may not let you do that. I have done tests with smaller account, and sometimes it doesn't let me, with some brokers, depending like what your profile is as an investor, like how much margin the brokerage gives you, and their specific like idiosyncratic rules and their safety checks. So anyways, you may not be able to place that trade. I didn't even mention, but the reason I am doing that is because they have an earnings report. Oh, I didn't mention that. Okay, moving on. So next, let's go into the account so I can show you what I'm sitting at right now. So here's my cash position. It's quite large. If you look at it through the circle here, it's 25% of the account. And then stocks and options is the other 75%. Losers and winners. By total return here, Apple's number one, Main Street Capital, Realty Income. Those are my main positions right now. And then I bought one share of JEPI. JEPI. JP Morgan Equity Premium Income Fund. This fund right here, if you guys don't know, is a equity premium fund that was started by JP Morgan back in the March 2020 days. So a really volatile period. But it's supposed to track some value stocks and then sell call options on the S&P 500s to kind of counter some of that, upward movement, and also collect premium in the process. So their dividend is quite big. So for example, I'm going to be receiving a 42-cent dividend on May 4th for just one share of 54.95. If you think that's not a lot, it actually is, because it's not a quarterly dividend. Okay, it comes in monthly. So it's actually quite a bit of money. I think the yield on this fund is somewhere around 12%. It tells you what they're invested at in here. So Robinhood's actually gotten really informative with their description of the funds and stocks that you're investing into. So I think this app keeps getting better and better, or website company, when it comes to servicing what the investor really needs. Now, of course, it's not the best at providing the amount of information, but I think it's probably the clearest and most fun to browse around in. So that's why I use Robinhood. I think it's just fun to do it. Everything is really clear. The options wheel is pretty well laid out. So in case you're a Robinhood hater, that's fine. I just like it because of the interface. If you feel safer somewhere else because of some of the shenanigans that have happened, good luck. All brokerage houses are basically the same. So you may find a better one. Interactive Brokers has a good reputation. I have an account with them as well. Okay, so that's JEPI, 1 share, 42 cents per month. That's not bad at all. But that dividend may not be too safe. So you're going to have to try to look into the fund yourself. This is not a stock recommendation. And finally, JD.com. So I've started to scale into JD. I've got a little bit over $1,000 worth of market value at the moment. My average cost is 34.29, which is a little bit above what it is right now. It's about 7 cents above the current price. So if it goes down another couple of percent, then I will most likely pick up more shares of JD.com. I'm very impressed by the growth of the company. I'm not going to do another video. This is not about JD.com. This is just an update on the account. For those of you wondering how to place a calendar trade, why don't I show you real quick what I did, just in case you want to do it yourself. But calendar trade collects theta decay, basically. It gives you money as time goes on, and it banks on the difference between the near duration option and the further duration option. They should have a different premium pricing. The near duration is pretty much always going to be more expensive. So you're selling the more expensive option and buying a less expensive option when it comes to premium, not the actual option. The price of the option is reversed, but I'm talking about premium over time. Okay. So here's how you do it. You're going to go into options tab. You can do this on the phone. It looks very similar on the phone. And then you're going to pick a date, of course. If you want to do it after this earnings results or before the earnings results, you can pick May 5th. And then you're going to sell, let's say, a call option at a strike price. Let's say something near the strike price here, 167.5. Okay, so you sell one of those, and then you change the date to 1 week out, let's say, for example. You can do 2 weeks out if you want, doesn't matter. And then you're going to buy a call at the same strike price. Okay, and over here on the right, it tells you the different outcomes. Robinhood's graphics are actually pretty good. This is not an ad to Robinhood, but I just want to tell you why I'm using it. It's actually pretty good. It's very illustrative. So according to this graph, the way you read it is the left is the price ended up lower, and the right is the price ending up higher. So by May 5th, basically. So that means if the price is below 159.4 of the underlying equity, in this case Apple, then I will start losing money. And as I drag my mouse to the left, it'll tell me how much money I'm expected to lose. So if it ends up with 152.01 cents, I will end up losing $61.83. $61.83. If, let's say, Apple ends up at 162.91, I will be gaining $80.98. That's how it works. My peak earnings is if Apple ends at exactly the strike price by Friday at 167.5, I will be gaining $265.60. That's how you read that. And it works on the other way as well. The higher the stock price goes, the less I earn. and then I start losing after it goes over 176.27, which may happen. This earnings may surprise to the upside, and Apple could shoot over 180, in which case, by the way, I will no longer be owning Apple. Basically, I'll have, I think, maybe 100 shares max. So I'm gonna check right now and see what's going on here with my shares. So I have 200 shares of Apple, which represents 31.5% of my account. And I currently have them both as collateral. So if Apple finishes above 175, I lose 100 of them. And if it finishes on Friday above 180, then I lose all of my shares. I will be automatically selling them because I have sold call options against them. Okay, I have basically relinquished my right to benefit from them going over to these two strike prices. So I'm really betting that Apple is going to stay at $170-ish. That's what I'm betting at. If it goes downwards, I probably will lose $60 here, but I'll gain on the selling of Apple calls, so it's not as bad. But I really want it to stay where it is this Friday after earnings. But we'll see how it turns out. I'd rather keep my shares. But, if I end up with some more cash, that's fine, because the cash right now on the account, right, is giving me 4.4%. You can see it right over here where it says cash. On the right, there's a box there. You can see I've earned a total of $8.43 just by staying in cash in the Robinhood account, in the money market account. Because what Robinhood does, okay, you guys see this, right? 8.43. Okay, next payday, May 31st, they release the interest accrued over the month at the end of the month. So Robinhood's percentage, let's see if it says it right here, is 4.4. Currently, you can up to 4.4 APY, which is 19x more, whatever. It says 19x more than the national average, but it's really like, yeah, okay, that's not really hard to do because big banks don't give any yield on the money that you have on deposit, right? So it's not really a big accomplishment. But anyway, so 4.4% for Robinhood Gold users. It's a little bit less if you don't have Gold membership. But in my opinion, it's definitely worth the $5. I mean, if you're just sitting in a good sized cash position, then you're making that $5 monthly fee in cash interest alone. By the way, I do want to do a video on some of the competitors as to where you want to place your cash. Let me know if that's a video that you'd like to see. So I want to pull up, like Wealthfront, Ali Bank, CDs, Treasury Direct, SGov, Robinhood Gold, and just try to put them, or Interactive Brokers money market account. So all of these, I want to put them side to side and figure out like how easy it is to get in there and compare the yields and see what place is the best to put your cash on. So let me know if you want to see that. I've tried to research some of that before, but I got sidetracked by company reviews and other crazy stuff that I came across. So I made videos about that instead, but now I got to refocus. Other things I want to try to make a video on is my screening process, like what screeners I use, what metrics I look at when I'm trying to decide what stocks I like, or when I'm doing like an account review and whatnot. Usually I use stockanalysis.com, but there are many screeners out there. In fact, some brokerages have built-in screeners into their own application. So one of them I know that does for sure is Interactive Brokers, which I do use and I like, but it's a little bit complicated. It's not easy to use, and so I actually like browsing through Robinhood a bit more, even though it's less informative. But Interactive Brokers has a very wide like screener tool that you can see a lot of data on the tip of your hands if you want to, just by clicking on a few tabs and stuff like that. I know that other platforms do as well. I don't want to leave them out. I'm not a very big user of the rest of the platforms. Some of them do a really poor job of that, but it's not their focus, so I don't want to name those names. But anyway, okay, this is running really long for an episode. It's already been 15 minutes. I just wanted to update everybody on what's been going on into my account. I'm playing a calendar. I'm playing Apple's earnings. I'm betting that the stock stays about the same. If it goes up over 180, poof, my entire position is completely done. That's it.